This is Gavin Serkin. We're at Cape Town at the SuperReturn Africa conference here, and with me is Ibrahim Sagna, who is the head of financial advisory for Africa Finance Corp, which is a Nigeria-based multilateral institution focused mostly on infrastructure. Ibrahim, thanks very much for joining us. I want to start with the deal flow that you're seeing at the moment. What's this year been like, and how do you see it developing?
Thank you very much for having us, Gavin. We have had an interesting year, but I'd say that for infrastructure in Africa, it's actually been an interesting one because the continent as a whole is shifting the attention to that sector and transformation in agriculture.
In what way? What's happening there?
So what's happening is today the continent is evolving at two paces. You have a tale of two Africa. You have the commodity countries, which are Nigeria and Angola, that basically because of commodity have had a bit of privilege in terms of creating the transformation industries, the infrastructure required to get the commodity transformed at home. And on the other side of the pace, you have countries that basically lack commodities. Those are the Rwanda of the world, the Ethiopia. They've been busy for a decade trying to push export out, trying to transform at home, whether it's tea, coffee, laptops. They just figure out they needed to get dollar, not via oil. So because of that, they have an edge. And today, if you look at the numbers, the GDP, most of the countries like Angola and Nigeria have GDPs flirting with one or a very dismal number. And you have countries like Ethiopia, Rwanda, Cote d'Ivoire, who are basically between 5 and 10.
Mm-hmm. So give us an example of some of the deals, because we're coming towards the end of the year now. What will be memorable in terms of some of the deals that you've seen this year?
On our own, within AFC, the biggest point of the year, the high point of the year, was this transaction that we closed in June, where we consolidated our assets in power. And as you can guess, within the infrastructure scope, power is one of the predominant issues of concern. Mm-hmm. The lack of power on the continent is just way too massive. We've taken our portfolio in power, which includes a $900 million project in Ghana and a project in wind in Cape Verde that provides close to 20% of the power in the nation. We've consolidated those assets with assets in power that are owned by a South African fund manager called Harriet. And today we basically have consolidated assets in more than 6 countries, close to 2 gigawatts of power that is going to grow, and that covers over 300 million people population-wide.
And so these are people who, until now, have had quite limited access to power, or unreliable, or non-existent.
Yes, exactly. I mean, in most of these countries, you still have the power issue. And what these projects are going to do is increase, in some cases, the capacity by 10% in some of those countries. So still not perfection, because it's coming from a low base in terms of power penetration. But our goal is to work alongside parties in the investment sphere to basically create a bigger dent, because the issue with power in particular is not necessarily 100 million or 200 million that's going to translate into many megawatts of power. So you need to be very innovative in the way you try to solve the problem.
Okay, well, this sounds like quite a milestone. This year, what are you looking forward to next year?
So for us next year, we're trying to, as a corporation, cover a broader range of countries. We're going to be 10 years next year as a group. We were created exactly 10 years ago at that juncture. And we'd like to really look back as to what we would have achieved then, Up to today, we've managed to take an initial balance sheet of $1 billion, grow it to almost $4 billion today. And in that time frame, we've managed to cover investment in 26 countries and aggregate 14 member countries. And most of those are in West Africa, where we have Nigeria, Ghana, Cote d'Ivoire, Cape Verde, Gabon, and more. In East Africa, we have Djibouti, Rwanda, Uganda. We probably would like to include more countries, deploy in a lot more than 26 countries, and probably be in a position where the infrastructure proposition in terms of what we achieve is as innovative as what we've done this year. So we seek to do more things in other sectors like that, where we create big scale projects that have impact in many countries. So our view is the more regional we can be, the more Pan-African this project can have an impact on, the happier we will be.
There's been some concern in Africa on the effect that the new president-elect, Donald Trump, will have on investment in a few different areas, particularly the effect on some of the US-led NGOs that have been investing into Africa. Will this election affect your world?
Yes, I think it's fair to say it's still early to formulate an exact projection, but the one thing that is for sure is that with this new election, the preoccupation of the new government in the US is first and foremost going to be the US. That's been the narrative we've been accustomed by the president-elect. So the one thing that we can be sure of is that Africa will need to expect more from Africa and less from America, whether in terms of investment, in terms of NGO, policy, aids. So I think it's better to prepare for less and construct more inward. So as an organization, our purpose has been historically to have Africa-led solution. That's why we are the Africa Finance Corporation. So we are a DFI, and fundamentally our job is in the subject of infrastructure, try to bring African solution, African capital, because today if America retracts, you will have more China, more Russia. There's a lot of debate whether one is better than the other. Mm-hmm. One thing for sure, and we hope to continue to demonstrate, is Africa for Africa is better for Africa.
Ibrahim Sagna, Head of Financial Advisory at the Africa Finance Corp. Thank you very much for joining us. This is Gavin Serkin for Africa SuperReturn in Cape Town.